Welcome to Explain the Charts, where we dissect the market with a keen eye on both current events and technical analysis. Today, November 5th, 2024, we're taking a deep dive into the SPY, S&P 500, index, examining the recent news surrounding the U.S. presidential election and its impact on the market. The market has been volatile in recent days, with the Dow Jones Industrial Average falling 258 points, or 0.6%, on Monday, November 4th, 2024, as investors grappled with uncertainty surrounding the tightly contested U.S. presidential election. The S&P 500 and Nasdaq also fell 0.3% each, reflecting the market's cautious sentiment ahead of the election results. A poll by the Des Moines Register showed Vice President Kamala Harris leading in Iowa by 3 percentage points, a state that was considered a solid victory ground for former President Donald Trump in the past two elections. If Harris wins, it's expected to benefit renewable energy and electric vehicle companies due to her more climate-friendly policies. On the other hand, Trump's potential loss raised concerns about tighter regulations on banks, potentially leading to lower fee revenue for major banks. The election outcome is also expected to impact the government's debt sales, as investors are watching the bond market closely. Now, let's turn our attention to the charts, starting with the daily chart for SPY. Looking at the daily chart, we can see that SPY has been in a clear uptrend since the beginning of October 2024. This uptrend has been supported by strong economic data and positive corporate earnings. However, the recent election-related uncertainty has caused some hesitation in the market, and we can see that SPY has pulled back slightly from its recent highs. The 50-day moving average is acting as a key support level for SPY, and a break below this level could signal a further correction. On the other hand, if SPY can regain its momentum and break above its recent highs, it could signal a continuation of the uptrend. To get a clearer picture of the short-term momentum, let's switch to the 1-hour chart. Looking at the 1-hour chart, we can see that SPY has been consolidating in a range over the past few days, with a lot of back and forth action. This range has been bounded by the 50 and 200-hour moving averages. The consolidation pattern suggests that the market is still uncertain about the election outcome and is waiting for a catalyst to break out of the range. If SPY can break above the 200-hour moving average, it could signal a short-term bullish breakout. On the other hand, a break below the 50-hour moving average could indicate a bearish reversal. To zoom in on the most recent action, let's focus on the past 24 hours on the 1-hour chart. Over the past 24 hours, we can see that SPY has been trading in a tight range, with a lot of volatility. This volatility is likely due to the anticipation of the election results. The 50-hour moving average is acting as a support level, and a break below this level could trigger a short-term sell-off. On the other hand, if SPY can break above the 200-hour moving average, it could signal a short-term bullish breakout, potentially leading to a move towards the 5,800 level. For a more granular view of the market's reaction to the election news, let's transition to the 15-minute chart. Zooming in on the 15-minute chart, we can see that SPY has been highly volatile over the past few hours, with significant swings in both directions. The market is clearly reacting to the unfolding election results, with every piece of news causing a ripple effect on SPY. It's important to note that the 15-minute chart is very short-term, and the volatility we're seeing could be fleeting. However, the 15-minute chart can provide valuable insights into the market sentiment in the immediate aftermath of the election. Looking at the recent price action on the 15-minute chart, we can see that SPY has been forming a series of higher highs and higher lows, suggesting a potential bullish bias. However, the volatility is still very high, and the market could easily reverse direction. The 50 and 200 to 15-minute moving averages are providing support levels, and a break below these levels could indicate a further sell-off. On the other hand, if SPY can break above its recent highs, it could signal a continuation of the bullish momentum. To recap the important price levels for SPY, we have the 50-day moving average as a key support level on the daily chart. On the 1-hour chart, the 50 and 200-hour moving averages are acting as support and resistance levels, respectively. And on the 15-minute chart, the 50 and 200 to 15-minute moving averages are providing support levels. In terms of predictions, it's still too early to say definitively whether SPY will trend higher or lower in the long term. The market is highly sensitive to the election results, and the direction of SPY will likely depend on how the market interprets those results. However, based on the recent trend and technical indicators, it seems likely that SPY will consolidate in a range in the short term. If the election results are perceived positively by the market, it could lead to a bullish breakout above the 200-hour moving average on the 1-hour chart. This could potentially push SPY towards the 5,800 level. On the other hand, if the election results are perceived negatively by the market, it could lead to a bearish reversal below the 50-hour moving average on the 1-hour chart. The 15-minute chart is very short-term and highly volatile, so it's difficult to make any concrete predictions. However, the formation of higher highs and higher lows suggests a potential bullish bias. But the market could easily reverse direction. It's important to keep an eye on the news and economic data in the coming days, as this will be crucial in determining the direction of SPY. Additionally, it's crucial to monitor the key price levels discussed, as a break above or below these levels could provide valuable trading signals. Stay tuned for more updates on SPY and the overall market as we navigate through this exciting and volatile period.